So this is not the market wrap. This is Crypto and Chill with myself, Mike, aka Veteran Crypto, and with me as always on Tuesdays and Fridays at 5 p.m. Pacific Standard Time is Jeff, aka the Blockchain Report, and our special guest this evening is David, aka David. So how's it going, guys? All right, all right.
Good day so far
I think
up here
so.
in the cabin.
Yeah, this is what we did earlier today. Mike and Jeff here, they thought it was a good idea to take my dumbass up the mountain, and so they're hiking up this mountain. I don't know whoever's watching if you've ever actually gone on a legit hike, but to me, I'm not quite used to hiking.
I'm not used to walking up things.
Yeah, I walk straight
Yeah, I'm in flat places.
on flatland.
Yeah.
But yeah, no, man, that was a great experience because when I got close to the top, my mind
Mm.
tricked me into thinking that I was gonna fall when really I was not gonna fall.
You're not gonna fall.
I was not gonna
You're
fall.
not gonna
And watching you and Jeff just casually climbing up this like it was nothing. Yeah, man, that's a goal for me
no,
right there.
no.
Yeah.
We'll do it tomorrow. We'll get you up there. But yeah. So basically, what we were wanting to talk about tonight is our boy Jeff here. He's been out of the market for a bit and been thinking about getting back in. And so what we kind of thought would be a good topic for tonight is the discipline of doing nothing. So picking kind of picking your entry. So sitting back, sitting on your dry powder, waiting for the right time to enter, and how that might look. So we're just going to kind of go around the room and just kind of each of us will give our opinion on when we think would be a good time to enter. Is it just to DCA in? Is it to wait for that perfect entry and go all in on key projects that you are thinking of doing, like certain percentages of your portfolios, like 50% Bitcoin, 25% ETH, and 25% alts, or whatever your kind of thesis is. So we're just going to kind of go through this, and maybe kind of all of us come out on the other side a little bit more analytical about how we're going to play out kind of the rest of this bear market to hopefully position ourselves for hopefully some kind of freaking alt season or something, because we got fucking hosed last time. And I waited for like 5 fucking years or 4 years for an alt season that never really came. So I'm still here. I'm still in it. I'm still in the fight, but damn.
Just to get bent over.
Yep. I got trumped. Freaking so yeah, no, it's so yeah, let's go around the room. So where do you guys want to start?
You want me to do the socials real quick?
Yeah, you know what? Do the socials and then you start, Jeff, because I mean this is kind of we framed this around you and you getting back in. So
Yeah.
like tell us where your head's at after the socials and kind of like what is it that's on your mind? So go ahead and hit the
What's
socials.
on my mind? Well, happy Friday, everybody. Here at the Node channel or the Node Network Crypto Cabin, we're coming to you live for our first full show. Yeah, it's been an awesome time here so far, but we have a whole host of shows throughout the week for your viewing and listening pleasures. Here at the Node Network, we have the main show Monday through Friday, 9 a.m. Pacific Standard Time. It's a 2-hour show. Our Crypto and Chill Tuesday and Friday, 5 p.m. Pacific. The Blockchain Report segments Monday, Wednesday, Thursday, 11 a.m. Pacific. Sovereign Soil Saturday nights at 5 p.m. Pacific. David's Daily Market Wrap-Up, 1 p.m. Pacific, Monday through Friday. And Tuesday and Thursday, he does live private coaching with Ellie. So check that out if you are new. And Saturday Night Fever is our music segment here on the Node. That's Saturday nights at 6 p.m. Do interviews with DJs, them do a DJ set. So you get some entertainment. And the Red Pill, even more entertaining on Thursday night, 6 p.m. Talk about taboo topics and all kinds of fun stuff. Not always crypto related. So
Tell them about the Node OnlyFans.
Oh yeah. The Node OF
Yeah.
coming to you soon.
Right.
Oh,
I need dry powder, damn it.
oh yeah, we need that dry powder. So if you want to, check that out, subscribe. We love it. Oh, and our gaming and chill gaming segment is Wednesday and Sunday with Jay and Ellie, 6 p.m. Pacific. So a lot of stuff, not just crypto related, but music, gaming, entertainment, education. Try and give you a little bit of everything here at the Node Network. And oh, I need to load this. Okay, there we go. My computer's a little slow. I got some videos uploading. Not OnlyFans video. So save our website, thenode.pro. We have our live channels right here, our live shows right here with the chats. We got our show programs, the schedule throughout the week. So in case you don't know what show is what day and what time, you can check it out here. We have courses at no cost to you, from beginner to advanced, DeFi University, DeFi Academy, or DeFi High School, and Bitcoin University. So a lot of great educational content that people will charge thousands of dollars for, all coming to you at no cost. So great opportunity to further your learning, your leering. Join our community. The Discord doesn't cost a thing. A lot of amazing people in the community, and the DeFi University School. And of course, our YouTube channel. If you are on Twitter, jump over to YouTube so you can get in the chat, comment, talk shit, however you feel. And if you need one-on-one coaching, you yeah, they're loving it.
It's very nice.
It's very nice.
But if you're looking to further your investment journey, David offers a no cost to you 30-minute introductory call to see if you're ready to take that next step. So check that out. And our newsletter, one of the best things that we have to offer, that is $20 a month. You can generate it twice a day, fully customizable, and you can do a preview of the newsletter right here. So check it out. Generates news articles and links and support resistance levels, market sentiment. I mean, it gives you a ton of information. It'll save you hours and hours a day. And our store, we're going to be dropping some sick merch, getting things designed right now. So pretty excited for that. Little shot glasses, hats, hat pins, books. So got a ton of merch coming. Beanies. Although we need some tanks because the summertime's coming up.
It's
Gotta
true.
get that summer bod. And if you're on Twitter, like I said, follow us at the Node_network and jump over to YouTube. And also we're on the arena.social, but you can find all of our stuff, all the links here and in the Discord. You can get links to all of our stuff there. So that way you're not getting scam links from somebody that is a scammer. So stay safe and let's have some fun.
Nice. I just want to say, you weren't sharing your screen.
Oh, I know. I just realized that.
I was waiting to see how long it was going to take. It's all good. It's all good.
Here you go.
It's all good. I was just
So usually I have my multiple screens on.
I know.
And I'm not even high.
I know. I was just chuckling.
I'm sober.
It's all good. All right. So let's bring it back to the big screen where everybody can see us.
Yep. Let me hide.
There we go. And let's kick it over to you, Jeff. So what's on your mind? What are you thinking? You're thinking about getting back in the market. Where's your head at?
Yeah, I was thinking, throwing at least right now $100 a week, $100 to $200 a week into 3 or 4 different assets. Just splitting that up in between 3 or 4 assets just to kind of get some exposure. And then come closer to October, if we do get a big capitulation, have the dry powder that I do save up over that time and just kind of go heavier into that. But at least right now, taking smaller amounts, $25-$30 per asset, and kind of building up a small bag, and then if we do get that big capitulation, I can take what I have saved and just throw a big chunk in there and have a huge DCA event. But at least right now, because like Canton, that's one I want to get more exposure to.
Yeah.
But it's been going sideways. So if you're hoping for a huge dump, I mean, I don't know how far we'd expect that one to drop.
Well, I mean, it's gone down to 8 cents before. I mean, they can hear me. I'm loud as fuck. And so you're the quiet talker.
Yeah.
Oh, sorry. So Canton has been like 8 cents, and it's gone up to like 18, 19 cents. But for the most part, it's hung out around 15.
Mm-hmm.
And no matter what the rest of the fucking market does, Bitcoin pumps, freaking Canton doesn't do shit. Everything dumps, Canton doesn't do shit. It's like the biggest pump I've seen come out of it has been like 5-6% that happened like yesterday. And it got up to like 16.5 cents. And then now I think it's back down to about 16.
So Canton's a weird one because you can't really get native layer 1 exposure to it.
Yeah.
So anywhere you buy it, you're going to be getting some type of a derivative.
No,
basically?
it's. I think that it's. Because if I don't, and I should fucking know this. For some reason, I'm like drawing a blank, but Canton is. It's its own layer 1, but it's really hard to get. So like Kraken is where I bought it. I know on the Braun wallet you can swap for it, and there's a couple other exchanges, but for the most part, you would think with the amount of mind share that it gets, like on social media, and as many institutions that that are adopting it. I mean, just it's a major narrative, and it's a major player with TVL. You would think that there would be some more listings.
I'm pretty sure that the only way to get native layer 1 exposure to Canton would be to become a validator. So I think that we got approved to become.
Oh no, we did.
Yeah,
we just gotta
we need a sponsor, right?
No, we already did that.
Okay.
Well, so I think that's the only way that you can really get layer 1 exposure to it without getting some type of derivative, like some type of wrapped CC from a centralized exchange like Kraken or Braun wallet. I don't think that you're really getting like the true native exposure that way.
Yeah.
But all of the other projects and coins that we're going to talk about tonight, you can get native layer 1 exposure to them relatively easily.
Yeah.
Canton's kind of a funny one like that, though.
It is.
Well, and what was the fees to swap into Canton when you bought it, or was it
I just
like
I just bought it on
negligible?
Kraken.
Okay.
Use like USDC. I freaking bridged over, not bridged over, but I moved over some USDC from my Coinbase account.
So yeah, how does that work on the Braun wallet? If you have to buy it on native ETH mainnet, right? Like, so that means Braun wallet supports Ethereum network, but then you have to transfer that. Like, does it bridge over to the Canton chain, or
I swapped like whenever I did a little bit as I swapped. And it's, I know it's on ETH because you have to have ETH for the gas fees.
Yeah.
And so I know that it's doing all of it using ETH mainnet.
Okay. So it does the swap from ETH mainnet to the Canton network, and
so the exact mechanics of it, yeah, I see what you're getting
Yeah.
at. So in the wallet, I think what might be going on behind the scenes is you're basically depositing your ETH or stables. It sounds like you're depositing them into some type of smart contract, and then the wallet is like minting you a balance of CC because it's a derivative. So like the wallet is giving you that balance, but it's not like you can send that CC.
You get it.
Where could you, if it's on the layer
I
one,
could send it to like Kraken. I could send it to,
no, it wouldn't be on the ETH mainnet. It would be on the Canton chain. So it wouldn't be a wrapped asset at that point. If it was on ETH mainnet, yeah, it would be a wrapped asset.
Yeah.
But if you're buying it on, like, I'm thinking if you use ETH and the wallet, not a bridge, but it swaps ETH to Canton from ETH mainnet to the Canton chain.
I think we're like
it's
confusing
like,
ourselves.
But the bottom line for
It's a
me,
weird-
I don't think it's going to the Canton chain. I think that what you're actually getting out of Braun Wallet is a synthetic because they're a legit validator, and so they've got real CC, and then they like mint like a synthetic.
make
I don't
sense.
know if that's what they're doing.
Well, no, but if they were, that is how they would have to do it. Because you're right. Because like for me, holding my Canton there and buying their Braun token, and I'm earning Canton every day, and
they've got to be a validator to do that.
And that's, I think, how they're paying that is as a validator, they're earning fees for services or whatever it is that they're doing on the Canton network, and that's how they're paying out people like me to hold their liquidity there.
Right, exactly. And so they like give you a balance of CC in the Braun wallet, so you can see your balance there. But let's say that maybe just for the sake of example, let's say that I'm an institution like JP Morgan Chase, and I'm using the Canton chain in my day-to-day business operations, and I've got a bunch of CC tokens, and I want to send those CC tokens to another institution that operates on the Canton network. I'm just curious, like if I'm JP Morgan and I want to send, let's say Jeff, your Citibank, and Mike, your Wells Fargo, I want to send you guys some CC for whatever reason, right? Is it just an address-based thing? Like, would I need your public wallet address? Or like, how does that work on Canton?
I have no clue.
Me neither. Yeah.
I mean, I would guess that, I mean, it'd have to be one of the institutions using it to really know, kind of what that, UI, UX looks like.
Right. Because there's no like public facing retail DeFi on Canton. It's all institutional money.
Yeah.
Yeah. So I'm just thinking like that must mean to me anyway, that if I'm holding CC on Kraken or Braun, that I'm holding really like a synthetic, and it's backed by CC that they own. So it's backed by CC, but really, I think they're probably all synthetics. So like, but that makes Canton unique because every other one of the coins and projects and tokens that like we want exposure to, you can own them. You can actually flat out own them. But Canton, I don't know if you can, unless you're a validator and you're actually doing that.
I mean, it's a good question, and maybe something that we need to dive into.
Yeah.
I mean, that would have been a good question for Shaw.
Yeah. Like, how do you get real native layer 1 exposure to the token?
Yeah.
It's got to be by becoming a validator and actively running nodes.
Well, let's get back to the topic at hand.
Yeah.
And so, David, what is your thoughts? Like say that you're Jeff, and
my name's not Jeff.
Yeah, my name is not Jeff. So, if like say that you don't have any exposure to any assets, that you're just about to start dumping liquidity into the markets, and what if you were to build from scratch? What would you want to see to give you the signal to where you're going to start deploying dry powder? How would you deploy that dry powder, and what would you deploy that dry powder into?
There's two things that come to mind for me first. Number one is the length of this current Bitcoin bear market. I think that we're in the 5th or 6th inning. And I think that the bear, based on previous cycles, should end in the first week of October this year. So a little bit early for me to be buying anything. So number one is time. The second one is price. And when I say price, what I'm really referring to here is I'm looking for signs of, I'm looking for real signs of capitulation. So, we haven't seen any real capitulation out of Bitcoin holders yet. And it's also too early in the bear. So it makes me think that capitulation is yet to come. So I'm just thinking to myself, okay, well, we've put in this like really well-defined ascending wedge, and Bitcoin has just started to fall out to the downside from that ascending wedge. We've gotten rejected at the 200-day moving average, and this is within a much larger downtrend for Bitcoin with two bear flags that the first one confirmed and completed. The second one looks like it could be about to confirm. So all of those things together tell me, okay, probably just need to wait a couple more months until we get a sign of capitulation. Now, how would you know it's capitulation? It would be a massive down day, either a single candle or down week, or maybe 2 weeks, where volumes go through the roof. Like volumes have to be massive. And then you would start to see accumulation. And that would mean, hey, the bottom's in. And you would know it's accumulation based on volumes again.
Okay.
So we've really got to start tracking volumes over the next couple of months closely. And I'm just thinking to myself, well, if we're still not quite done with this Bitcoin bear, then that means if Bitcoin breaks below its 200-week moving average, altcoins are going to get smoked even more than they already have.
Yeah.
And so I'm just thinking to myself, well, all right, if I want to be patient and just wait for capitulation and what I think will be excellent entries, because you make your money on the buy, right? So I just want to be a little bit more patient here, wait for capitulation, and I need my shopping list ready. And I need to know which projects I want exposure to.
So what does your shopping list look like?
Bitcoin, number one.
USDC, just stocking up on you.
I'm going to buy heavily into USDC. I'm very bullish, and I think it's going to pump.
Oh man, so that's the USDC holding cash.
Yeah,
that's like just bleeding purchasing power.
Yeah,
because that PPI that we just saw earlier this week printing above 6%.
Unless you're using it in DeFi and you're outpacing it.
Well, yeah, you got to be. But the problem with running plays with stables and DeFi is if you're not making 25% or at least 20% in some type of interest rate arb on stables, you're taking a lot of risk, regardless of what protocol you use. A lot of smart contract risk, a lot of economic exploit risk, and you may not even realize it. And so if you're not getting compensated well enough, then you shouldn't take the risk. And so 20% is like the minimum to take that risk. And I don't know about you, Mike, but Jeff, you too, man. Like, I don't know of any interest rate arb plays with just like, straight up fiat backed stables where you can get 20%. I mean, they're fleeting. They last for maybe a couple of hours, a couple of days, and you've got to take a lot of smart contract risk and you've got to run a lot of leverage to be able to generate those yields. So is it worth it? It's up to the individual investor to decide if their risk tolerance warrants that or not. For me, hell no. Like, I would much rather just take no risk, wait a couple of months for Bitcoin to capitulate, and then have my shopping list ready and go in and buy Bitcoin and buy all the alts.
No, I was talking about building my whole portfolio in USDC because I'm bull. Fuck Bitcoin. That's a gonna.
Unless you pick one of these assets like Hype that's just been outperforming, or Tron that has been outperforming Bitcoin.
Everything's going to zero except USDC.
Yeah,
that's my thesis. That's my.
This is not financial advice.
This is definitely not financial advice, and I am definitely not a financial advisor.
It's a good idea though.
So start rattling off. What's some of your top picks? You got Bitcoin.
So
how much of your portfolio is Bitcoin?
50%.
All right. So what's next? What's the next biggest part of your portfolio?
So probably it's going to be Ethereum if I can buy it for like something with a one handle, like 1100, 1200, 1300, 1400, something like that. If I could pick up ETH for like 1,000 something per coin, then I would definitely like to stack some ETH. because
What percentage of
Getting
your
back to
portfolio?
2020 levels, man.
oh yeah, well, I mean I think that we should expect altcoins to revisit their bear market lows from last bear,
Yeah.
or maybe even break below them in many
Oh, some of them
cases.
weren't that far from there already.
Right? Yeah, like AVAX, for example.
Yeah.
already there.
Yeah.
So
Ooh.
what percentage in
Yeah.
Ethereum? So I'm doing 50% Bitcoin. In ETH, like maybe 15% or 20%, because
Okay.
ETH, you got to think of it like a high beta asset, so very volatile. And if I'm going to compare Ethereum's potential performance
Mhm.
in the next bull to other altcoins,
Mhm.
ETH needs to outperform those other altcoins, or at least I need to think that ETH is going to outperform those other alts
Yeah.
to justify ETH having a bigger portion of the portfolio.
Makes sense.
So, number one, I believe in Bitcoin, and that's why it gets half. I believe in Ethereum, but like, I just don't know. Like, is ETH going to outperform all of the other higher volatility alts or not?
I don't think so.
It's, it remains to be seen, right? So that's why I'm saying 15%, something
Yeah.
like that. Because if those other alts actually really drastically outperform ETH,
Mhm.
I'll be happy that I had a higher allocation to those other alts.
Mhm.
So what are those other alts? Well, I like Solana, but only if I can get it for sub $30.
Okay.
So I would pick up Sol at sub 30.
All right. So what percentage? You have 35% left. What percentage of it would be sold?
Maybe 2.
All right.
Um,
So you got 33 left.
and then, now I want to go down the list here a little bit. So
Right.
thinking about, something like, definitely like Tron for sure. Love those tokenomics just because all the revenue feeds right back into buying and burning
Mhm.
TX. Like that quite a bit. So would want an allocation to Tron.
Is it
Definitely.
inflationary or Tron, or
Well,
is it more get
technically,
minted?
I
And
think we ran some research on that a couple weeks ago,
Mhm.
and I think it's become deflationary, but
okay,
I'm not sure. And I'm also not convinced that deflationary means number go up, because
No,
yeah,
no.
you know,
I mean that's what you would hope, but I think there's a lot of other variables that dictate price movement, other than
100%.
just if it's
Yeah.
inflationary or deflationary.
Yeah, so Tron for sure. Canton we were talking about for sure.
Well,
Um,
I mean, look at it from this point of view. It's like, yeah, there can be less and less fucking tokens in circulation, but if there's no demand for them, if there's
then number don't go up.
no never don't go up.
Yeah.
I mean, it could, but it's but it's gonna be speculation. But anything sustainable, you're looking at where there needs to be a demand for the token. It needs to be a utility token. Not necessarily a governance token that just allows you a vote in how
Right.
protocols run or something like that. So there would have to be some utility to it. So if it's deflationary, there's some utility to it where it's required to use the network, or it has some part in the operation of the chain. I would say then that would be a decent indicator of a good token that would have some potential for price appreciation.
I want the whatever the protocol is behind the token to
Yeah.
also be making a lot of money.
Oh, of course. Yeah.
And so that's super important. But return those revenues to token holders.
So you got Bitcoin, ETH, Tron,
Solana.
Solana, and
Can't talk
and
so
Can.
far.
All right.
But I like hype. I like the tokenomics again. Generates a ton of revenue.
Yep.
Returns those revenues to token holders in the form of buybacks and burns. Really like that.
And then the other 30% an arrow.
Yeah.
Why are we laughing?
Come on, yeah.
Why are we laughing?
I mean, there's nothing wrong with that,
I'm just
He said 3.2%.
Yeah.
He said 0.33%.
Yes.
Just for the 3V or the 3.3.
Yeah, the 0.33.
Yeah,
3v3.
I could swing 0.33.
Yeah.
No, but I mean, so after those, then I like BitTensorTau. I like the idea of decentralized compute like that. Whether or not they'll be able to make it work, I think the answer is yes. I think that many of those subnets are successful.
Even after the
businesses.
whole
Yeah,
recent
yeah,
shit show
the
that's gone on.
shenanigans. Yeah, even
Okay.
after that, I think people will move past that because there are successful businesses run on BitTensorTau. and there will be more and more of those subnets launching. I think they, upped the cap from 128 to 256. So there's going to be quite a few more. So definitely an allocation of BitTensor DAO. But then once we start going down the list, we're getting into now like some protocol coins or governance coins that where there are fee switches that either have yet to be flipped or like have just flipped, like the fee switches. Thinking Uni, so maybe it's small allocation to that. On Solana, maybe JUP, Jupiter, Jupe, small allocation to that. And then I really like Pendle. And so if I'm thinking Pendle, I'm also thinking Arrow, just because the tokenomics for Arrow, the new tokenomics, are going to be pretty similar to Pendle's tokenomics.
That's what it sounds like.
Yeah.
So far.
So definitely an allocation to Pendle.
Anybody that's thinking about getting into Arrow, I mean, other than maybe like just getting a little bit of exposure, I personally wouldn't ape in super hard. I would wait until more information comes out about the tokenomics and a lot of the mechanics and how. And there's a lot of information out there right now, but there's still a lot of unknowns. So I would want to wait for a more detailed picture before I went sizable in any way into Arrow. I'm already there, so that's
the new protocol launches in July.
Yeah,
was what that's confirmed.
Yeah.
So you got a month and a half.
Good timing.
I mean, is
That's
it
really good timing?
Yeah.
going to be buy the rumor, sell the news type
I
of thing?
don't know. I mean,
or
look, if
I'm gonna buy the rumor, buy the news,
buy the
and then I'm gonna buy the dip, and then I'm gonna buy the pump,
buy
and
it.
then yeah.
Just buy it all.
I'm
So-
just gonna buy
so
it.
Well, the tokenomics will
speaking of
come out
that-
before that, right?
I think
They
it
should.
should. It should. But speaking of buying the rumor, buying the news, buying the pump,
yeah.
we should talk about position sizing, because like
Mm.
let's say that you see what you think.
Well, sometimes it's not about the size. Sometimes with the right position,
Yeah.
it can feel like it's there's more size to it.
Facts.
I'm just
So
not from personal experience, mind you, but
you've been
just-
told.
I've been
Yeah,
told.
you've been
I've
told.
been
Yeah.
told. I've been told.
By other people.
Yeah.
Yeah.
You've been leered.
No, but I mean, like, let's say that because no one has a crystal ball, right? It's impossible to know the future. You can't possibly know if when you think Bitcoin has capitulated, if it actually did, or if maybe there's going to be even another leg down. So, like, let's say the BTC capitulates to 47K. At that point, depending on when it is, if it's the end of the summer and BTC's at 47K, I might think, okay, this might be the bottom.
Yeah.
But what if it's not? And you decided to
Mm.
deploy all your stables at BTC 47,
Yeah.
and then all of a sudden it dumps to 33,
Yeah.
which of course there's no way to know the future.
But
So
I,
it could.
I wouldn't stress about that too much because I mean I know that I didn't buy the exact bottom, but I fucking bought for an awesome fucking price.
Yeah, but think about the psychology of buying not just Bitcoin at 47,
Yeah.
but all the alts when Bitcoin's at 47.
No, I mean I get that,
And
but
then-
it's but I almost think people get too wrapped around the axle about not getting that perfect entry, and it's just like how fucking hard that is. I mean that's like trying to fucking shoot the wings of a fly at 1,000 yards while galloping on horseback. You know what I mean?
Impossible.
Just impossible.
So how do you mitigate that risk?
I would say that you don't all in ever. You
Right.
just do sizable chunks, but at key levels.
Right.
So like look at Bitcoin, and I've heard a lot of people calling out that 50,000, 52,000 level, being a previous line of support or resistance or something like that. Historically, so I would say that deploy some dry powder there, and maybe into a couple of key alts if you see some like good deals, like if there's some like solid dips at that time,
Yeah.
like maybe they dipped harder than the rest, and so it's like what, I'm gonna get some sizable chunks of those too, but then keep a percentage. Like maybe if you think that there's a possibility it goes to 34 after that, then maybe you deploy 50% at that 50,000 mark, and then if you see it dip down into the 30s, then you're like, all right, fucking, I'm all in.
So I think that how would you know if the alt is a good deal? And here's how I would
Yeah.
tell. If that alt is back at its bear market lows from last bear, I would consider that to be probably a pretty deal.
As
Depends
long
on
as
which one we're
it's
talking about, but
That
as long as
22, 23 low.
yeah, the 22 lows, the 23 lows, yeah, right at the start of the bull, the depths of the last bear.
Yeah.
well, and we talked about this when we were eating dinner. It's like just because something dips really hard doesn't mean that it's a good buy.
Right.
I mean, some projects could dip and just never come back, and
Dot.
it's just, but
And
it's the truth. I mean, don't just think because something something's a great historical buy, like something that's been like $5 in the past and now it's like at 10 cents, and you're thinking, oh, all it has to do is go back up to $5
Yeah.
and I'm fucking rich, because I freaking bought $10,000 at 10 cents. um it doesn't always work like that. Can it? Absolutely. But
so
it,
maybe the play is, wait for that first capitulation
yeah,
and then deploy half.
yeah,
Just deploy half and then because having a cash position is, I think, a legitimate option. It's a zero strike option.
yeah.
It gives you optionality to be able to go out and buy something if you want to.
I got like 4 or 5 grand in USDC right now.
See, that's optionality.
But and it's stuff's been dipping since I did it, so it's basically I've held that value. Whereas if I was still in those assets, I'd probably, my guess would be I would be down like $500 or something like that. So
Yeah, well, I mean, there was a little bit of a pump out of most alts recently,
hmm, but
so
most of them lost all of it.
they're giving it all back.
Yeah, they're giving it all back.
Yeah,
And I, like I said, I mean, not that I have a crystal ball, but I was telling people to take profits. All the people that were
we
talking about
were.
Hondo on X and stuff like that. How this is the inverted Head and Shoulders, and it's about to go to the moon. And I'm
Nah,
like, take profits, take profits.
turned out for all of those altcoins that this recent pump was simply a lower high.
Hmm.
Mm-hmm.
At least that's what's played out so far. So yeah, I mean, what am I thinking about for this next bull? Well, I'm thinking about, buying the tokens that I want during this current bear, right? So if Bitcoin ever dumps down to 47 or 50, I'm definitely going to deploy, but can't go all in
Yeah,
because I know that my brain will totally mess with me if I went all in, let's say at Bitcoin
and then it dipped
50K
again.
and then it goes to 33.
Yeah,
Dude, those alts that I buy at 50,
yeah,
Hmm.
they're going to get crushed, man.
yeah,
And so like imagine, deploying 100 grand and then watching it go to 50
yeah,
and having to hold that shit for months just to get back to break even.
yeah,
That psychological stress for a lot of people would be too much. They would capitulate right at the point where you really want to be holding on,
yeah,
like the end of the bear, the
yeah.
start of the next bull, right?
Well,
So
and that comes back to the title of the episode here. The discipline of doing nothing.
it's not easy.
For a lot of people, it's not.
When do you set like limit orders at all on the way down or at lower levels?
Really, all I'm doing is waiting for levels on Bitcoin
Okay.
because the alts are just so
So you like to
ridiculous.
manually
Yeah,
do it and just
yeah,
not have to worry about.
yeah,
Okay.
yeah. The alts
I
are
keep,
just
Oh yeah.
I keep working my way that direction.
the alts, all of them. The levels of volatility are just so ridiculously high that for me to set some type of an entry that's automated, um, I don't want some automated entry working behind the scenes. I
Mm.
want to manually enter those positions.
Mm,
And since the mechanics of how you enter the position, like, are you planning to hold these assets on a centralized exchange? Are you planning
mhm,
to self custody these assets? That's why we were talking about CC at first, because it's really hard to self custody
mm.
CC right now. But everything else, like, I'm just thinking get a Trezor and then on ramp stables. And then I would even think about using maybe Change Now to slowly swap in from stables into, any of the alts that I mentioned, or
What's
even
changed
Bitcoin.
now?
Change now is just like a permissionless DEX. You could think of it that way, where you can, swap USDC on base for Bitcoin on the layer one sent to your wallet, or you could swap USDC on base for. I'm pretty sure that you can swap for BitTensor Tau. You might not be able to, but I'm pretty sure.
Is it better than matchas? Or
Um,
is it like a
I think that it's more of an I think Matcha might be more of an aggregator. I'm not quite
Okay.
sure. Where you might be able to see like a swap route, using Change Now. Another like swap service aggregator that I like is Rubik.exchange.
mm-hmm.
So yeah, the method by which you get these bearer assets is important too. So like I would just want to custody them in my Trezor, and spot, no leverage. I'm just literally waiting for capitulation from Bitcoin. And then I'm going to be buying these assets spot, no leverage on my Trezor. So that's the plan. It's actually really straightforward. The problem is you got to be patient and you got to be able to wait for that capitulation. And then you got to have the balls to be able to step in and buy.
Yeah.
Because it doesn't feel good when everything is dumping and X is talking about, oh, we're going to zero, but that's when you want to buy.
Yeah.
If it's the depths of the bear and things are red everywhere, that's why you've been saving the stables.
Yeah.
Is because that's when you fucking buy. So
Fear and greed index, when it's low like that, it's been the best indicator to buy.
yeah, it's just you got to be able to wait.
Yeah.
And that's the hard part. Sitting doing nothing. Like especially when you see all these, alts going crazy, a handful of them, or you see like crazy high APRs and some interest rate arb play.
Yeah.
It's like, oh, well, I could just do 98% over here.
Yeah.
And then all of a sudden you see that token rug. It's like,
Yeah.
fuck, I'm happy I didn't do that.
Yeah.
Yeah.
Chasing it or blowing it on fees, trying to jump from
Oh God.
pool to pool and then getting shaved off little percentages at a
fraction
time.
at a
And
time.
Yep.
It's never good to chase. You should never chase.
Nope. So yeah, there's
money or women. You should
yeah,
never chase.
no.
yeah, so who was the right hand man to Buffett? What was his name again?
Oh, Munger.
Munger. Yeah, he had a
Charlie
saying.
Munger.
Charlie Munger. Yeah.
Isn't he that bald dude?
Yeah.
Isn't he like a screaming leftist too?
They both are.
Oh,
Or yeah. So
okay.
Munger's deceased.
Yeah, he passed a few years ago.
I believe so. Yeah, I met him once at UC San Diego. He's very very smart guy, very successful, obviously. But he had this saying: there were three things that consistently blew people up: ladies, liquor, and leverage.
Terrorist.
Leverage.
And leverage. Okay.
The three L's. You gotta watch out for the three L's: ladies,
Yeah.
liquor, and leverage. So yeah, I'm not using any leverage. Fucking my ex-girlfriend hates me. And liquor fucking sometimes. So
Well, but you don't drink while you're trading
no.
at all.
No.
Yeah. And that's a big thing is, don't be under the influence when you're trying to trade, especially big position sizes.
I definitely have my set of rules, but let's we got a little bit of time left. Let's hear yours. What's your thesis there, Jeff? After hearing what David had to say, what are you thinking that you're gonna do as far as how you're gonna deploy your dry powder and into what?
Yeah, I want to kind of get a breakdown of, I don't want to just put them all in an even amount of each asset. I want to kind of have a different percentage for each one. Like Plume, I want to get some exposure, but I want that to be more of like a less than 5% of my portfolio.
Yeah.
So working on, I think, having a plan. We were talking about having a plan and getting our shopping list ready. Getting the assets that I want,
So 50% into sheep.
and into sheep, into dog fart poop coin.
Yeah. That's 25%.
I mean, hey,
you're up to
that's a
75%
that's a
in
plan.
solid assets. You know,
it's not a good plan.
It's
But,
I
that's
didn't
a
say it's a
plan.
good plan,
And
but
then
it's
the
a
rest
plan.
into EOS.
Yeah.
Great.
Catch me next year as I'm sleeping on the street.
And then the rest in Cosmos.
Yeah.
Oh man, as it goes to
Adam.
zero.
Yeah, so getting that at least 4 or 5 assets, and then breaking those down into different percentages, and I want to start with 1 to 200 a week, and then put another set amount in USDC just as dry powder for when there is a huge another drop, whenever that happens. But even putting like if we get a huge drop to 40K or 50K and then 40K, maybe taking half the dry powder and just doing a big buy and then waiting a little while to see if we get another huge pullback and then deploy that other 50%, but still kind of doing small DCAs each week.
I don't believe in DCA.
No.
I mean, not into these. So you were talking about like how much do I allocate to each one? And the way that I think about that is through the lens of volatility. Volatility. So like if you have a super volatile coin, it's going to get a smaller allocation than something that is less volatile. So Bitcoin, the least volatile of all of them, gets the biggest allocation. It's also,
So my 1/3 of my portfolio being an arrow probably isn't it?
It's a high risk play.
It is.
It is.
It could be high reward, or I
Right.
could lose it all.
Well, yeah, but you take that risk, and
No, it's like I said, I'm swinging for the fences.
there you go.
I'm swinging for the
But you
fences.
know that. You
Yeah.
know that you
Oh,
are.
yeah.
So
I'm
yeah.
under no illusion that that I'm playing it fast and loose.
there
And
you
at least
go.
he's got Bitcoin now, so he's
I-
getting
I-
his
good.
Bitcoin game in.
How much my portfolio, like my portfolio is the opposite of what David says you should do. So, and not to spite him, it's just like how my portfolio ended up.
Well, you just want to take more risk.
No, then that's really what it is.
Yeah.
It is, you're in a much different position. You've made money in crypto, and you have a sizable amount of money to where you're like, you've accomplished that, and now you're using DeFi to make your living and stuff like that. Where I have my nut, I have my my portfolio, and it's my play money, and that's what I'm using to try to make my nut, so that I can do what you're doing. And trust me, and I've said it a million times on the show, it's as soon as I can if I can 10x my overall portfolio, have some losers, some winners, but it averages out to where there's a 10x. I'm out. I'm out of everything for the most part except Bitcoin. A majority I'm gonna have in stables and Bitcoin that I can earn yield. Just earn like 10, 20%. A year, and just have that extra money, and just basically wait for the next bear and start buying into solid alts and solid projects, because it seems like every cycle there's a fresh set of new projects that are built better than the last ones.
Right. See, that's the thing, the new projects. So I'm really interested to get like some type of exposure to some legitimate moonshots. Like I'm talking about,
Not to be mistaken with face shots.
Yeah.
Yeah, you don't want that.
You don't want face shots.
But I'm just saying,
or
like,
back shots.
or maybe you do. I'm not judging.
well, I'm just saying
Not
about
Scoop Boy. I'm not judging.
Yeah.
About the
if you like
moonshots.
face shots.
fucking A, bro. The moonshots,
He's
though.
always giving me shits. I gotta throw Scotty some shade.
Yeah, man. I'm just thinking like the really low cap stuff, like the $3 million market cap type stuff, or like the $10 million or $30 million type market cap
Yeah.
stuff. Those coins, if they're in the right niche and that narrative like takes off,
Yeah.
then yeah, that's where you could get your 100x or something like that. I want some exposure to that too. You know,
I mean, everybody wants the.
I want to gamble
everybody wants to
with
play
something.
the lotto.
Yeah.
Everybody wants to play the lotto.
How much would you put into that?
Oh, very small. So here's on an example: $100,000 portfolio. I might take $1,000, 1%,
Mm-hmm.
and split it up 5 ways between 5 different tiny,
Like $200 in
Yeah.
each one.
because last cycle I missed Book of Meme on $300, which if I had just bought it, I would have made 2 million the next morning. Yeah, I
Oh,
missed that.
Yeah.
So I know it's real. I know it's possible. I barely missed it, but I've seen other people make it.
Yeah.
So I know it's real and it can happen, but it's also like basically almost a sure way to lose all your money if that's all you allocate
Oh
to.
yeah.
So
Yeah,
that's why
it's. I mean, it's just like regular gambling.
it would be 1%, and literally each one of those moonshots would be like maybe 0.2% of the overall portfolio,
Yeah.
and do 5 of them to make 1 point of the portfolio. That's it, 1%.
Yeah.
Yeah, but definitely would want some exposure to that. And but it really just comes down to, I think, waiting. But no one has a crystal ball, so you guys could be right. DCAing, Jeff, could be the way to go, because since you don't have a crystal ball, and none of us do, then just DCAing in, even on the way down, it definitely does work if you've got a long time horizon.
Well, and especially if you're somebody that doesn't have time to just be like us, that we just fucking sit and learn about the fucking markets and keep up on the markets all fucking day.
Right.
If you have a life and a fucking family and a regular job, a 9 to 5,
True.
and, all that kind of stuff. Maybe you're just like, all right, I've learned about these couple of projects and at these prices. If it dips to this price, I'm just a percentage is going in. If it dips to this price, another percentage is going in. And you just DCA like that. Or every time you see a dip, maybe you just buy a little
That makes sense to me.
bit.
Yeah, it does. We
Is
just
it an exact science? No.
no, but we just got to be able to admit to ourselves that we don't know anything.
Yeah.
Mhm.
Like, and no one does.
Yeah.
And so, like, if anyone tells you, like, I know it's going to 10 grand a coin, bro, like it's going
Yeah.
straight up to the moon, like, no, they don't.
No.
Or if someone says, it's going to 0, they don't know that either.
No.
Unless you're talking to like the insiders who are about to dump it.
Yeah,
Like,
or you're the insider that's about to dump it.
right. But like, no one knows anything. And so that uncertainty, how do you deal with it? Well, by number one, not going all in, with all of your capital all at once,
Mhm.
thinking that you know something, because you don't. So just I think that maybe DCAing is a good idea. So how do you plan to do that? Because if you're going to DCA, how do you go from fiat in a TradFi bank account
Yeah.
to stables
Mhm.
on chain? How do you actually do that?
Coinbase.
I prefer not to use Coinbase for that.
I just really like Coinbase because I'm able to like on ramp my fiat with no fees and move it off Coinbase immediately with no fees.
True.
So basically it's my portal. It's like is it
It's surveilled.
yes, heavily.
Yeah.
But again, I mean it's I mean for the most part all of crypto is transparent to where they can see is there ways to mask it? Yes, you can go to like a Bitcoin ATM and buy it there, and but you're still
You're
if
paying
using your
massive fees.
well, and you have to use cash because if you use your card, it can be attached to you.
Right.
There's just so much song and dance that you have to do if you want to be kind of off the grid with crypto.
It's very, very difficult. And we were talking about this before the call. Like, how can you on ramp with no KYC? Like, how can you on ramp without being surveilled like that?
And without your bank dinging you in case, oh, is this a fraud charge? Or, if you try and transfer using some service that doesn't KYC, and then your bank's like, oh, what is this withdrawal fee? $1,000. Or if they know it's a crypto service, they could flag your account. What are the chances of that happening?
I think pretty high.
Yeah.
Depending on the bank. Yeah. So definitely I would learn more about whatever the policies are of your bank, for sure.
But when I think about on ramps, there's Coinbase, there's Kraken, there's all the rest of the centralized exchanges. There's EtherFi is an on ramp. There's you can use Spritz.finance. That's a pretty legit on ramp. You know,
Spritz doesn't KYC.
they do.
Okay.
Yeah, they do.
Okay.
So all of these that I mentioned, they're all KYC. So how do you escape that? I think either you've got to buy assets in person, like peer to peer.
Yeah.
That's probably the only way,
Probably.
But that means, dude, you take a lot of risk by doing that. Because let's say that you want to buy 10 grand of Bitcoin and you want to do that in person.
That person knows you're showing up with 10 grand cash.
That's exactly right.
Mhm.
You're showing up with 10K in cash. And so, like, what are you going to do if that person says, hey, give me your shit?
I wonder if there's a market for like peer-to-peer crypto transactions.
There are many. I've just never used them, but I know people who
if
have.
it could be done in a smart contract, well, I guess then it'd be trackable again.
Yeah, so the whole idea here is you need to be able to get off of that fiat into a digital bearer asset without being surveilled.
It needs to be an air-gapped transaction.
It's got to be cash, and then someone sends you
that's
that.
what I mean by air gap.
Yeah.
Like there has to be a point to where it's not on chain.
Right. Well, that's got to be in person.
That's the only way I can think of.
It's got to be in person.
I mean, you got mixers and stuff like that, but to be honest, I guess one thing I learned from watching the subcommittee hearing, banking committee, when they were doing the Clarity Act, was one of the things that Warren brought up was
my favorite,
the tornado
love her.
cash. Like you talking about
Yeah.
tornado cash, the mixers, and illicit activities. And Senator Loomis, I think it was talking about that. He's like, we have the technology to where we can track where it goes, even if it's put through those like tornado cash and
right.
Platforms like that. She's like, it's a moot point. There's no reason for us to accept this amendment.
Yeah. Well, I'm very happy that it wasn't accepted.
Yeah.
Because those guys, they were treated like criminals for writing code, and they shouldn't have been.
Oh, dude, that guy spent how long in jail?
5 years.
Yeah.
Yeah.
And he got pardoned. Yeah. Wasn't he got pardoned by Trump, right?
I don't know. I
think that's how he got out.
I think maybe some of them might still be in prison.
Well, I think the main dude got pardoned or something.
Oh, like Silk Road, Albrecht.
Maybe that's who I'm thinking of.
He was in for a lot longer than that.
Yeah, he was in for like 10 years.
So how exactly did he become like a poster child for Bitcoin? Because I used the Silk Road.
Yeah.
That was why I bought Bitcoin.
Yeah.
Like back in 2011 or 2012.
You were wanting to donate to Greenpeace, right?
Right.
Yeah.
Yes.
Yeah.
And so the only way I could do that was by using the Silk Road. Some guy told me that. So,
It's for the children.
It's for the children.
It was for the children.
So, but that whole process back in 2012 of buying Bitcoin, that was like really time consuming and frustrating, and you didn't know if you were getting scammed or not.
Yeah.
I was able to do it. I bought Bitcoin. It was like $40. But I don't understand how Ross Ulbricht is like a hero for the Bitcoin community, because back then, like, Silk Road was just a drug marketplace.
Pretty much.
How does that have anything to do with Bitcoin? He accepted Bitcoin.
I think
but
that's
why
does
that mean that he's like a Bitcoin folk hero?
I think that simply because
that.
he was one of the first places that allowed it to be used as a currency.
And everyone thought it was private and anonymous.
Huh.
That's the only reason I can think of.
I just never understood why, like, for Bitcoiners, Ulbricht is a folk hero, because in my opinion, he was a digital drug dealer. And
he wasn't necessarily a drug dealer. He provided the marketplace for drug dealers.
Yeah. So, I mean, I think that there's a little bit of a distinction between like someone who is a libertarian and someone who's actually causing harm like that.
Mm.
But maybe a conversation for a different
Mm.
time.
Yeah.
Yeah. But like when it comes to portfolio construction during a bear, I think Mike, what you were saying about like I want a cash position,
Yeah.
I think that's the thing right
Mhm.
now. Or if you're a little bit more adventurous, maybe you're short, you know. So but if
Yeah.
you're planning to hold, like Jeff, if you're planning to hold and your horizon is like 3 years, and that's your plan is like, okay, I want to be able to accumulate a position over the course of the next 6 months. And then I plan to hold that for the next 24 or 30 months.
Mhm.
Then, okay, DCing in over the next 6 months, a couple $100 a week makes a lot of sense. And then it's just a matter of, okay, well, what do the allocations need to be? If I'm going to go 50% Bitcoin, the other half, what's that going to be allocated to? And then how do I actually acquire these coins?
Mhm.
Where do I store them? Where do I store my fucking seed phrase?
Yeah.
Like you got to think about that, the self custody part. And then once you actually acquire the position, then hopefully it will be the start of the next bull. So by the time you're done accumulating that position over the course of 6 months, then hopefully the next bull starts.
Mhm.
And if it does, then you start thinking about exiting. And so, like the psychology there, when you see those big pumps, is you want to buy more,
But
but
you want to be selling.
but you should be
Start shaving
selling.
off.
Yeah.
You should be selling, right? And you obviously don't want to sell too early, but if you
That
hold
reminds me.
on and you round trip,
I need to update my ladder out strategy because I've changed. I've gotten rid of some assets and consolidated, and that reminds me. I need to do that.
yeah. So it's not just the bear market strategy; it's
Yeah.
also after you slowly accumulate positions that you want over time.
Well, and you need to plan that ahead of time
Yeah,
because whenever those emotions take hold, that euphoria, and everybody's talking about higher and higher and
right.
higher, and we're going to the moon and
That's when
everything.
you sell.
But it's I could see
Yeah.
where you could get caught up in that euphoria and be like, oh, just a little bit more, just a little bit more, and I'll sell it. And then it goes up a little bit more, just a little bit more. It's just that greed takes.
Oh, dude. So what's that one mantra?
Yeah.
OM. Oh, dude. So I had a client
What was
who
it?
a client.
Oh,
I had a, I had
the
a,
asshole was talking shit.
yeah, dude, I wish this guy the best. If he's listening, I wish him the best. But he accumulated a position in Ohm during the last bear
Mm.
when it was a penny. Okay, and or maybe like a little bit less than a penny or something. He got it damn near at the bottom, and it was like $4,000 the position that he built. And you know what happened, right? So
Yeah.
this past bull, it went up to like $10. And so he was holding it on, a lot of it was on the fucking Cosmos ecosystem, and very little liquidity there to be able to exit. And so that $4,000 position it was like 1.2 million at the peak. And every time I would have a session with him, I would tell him like, you need to start selling.
Substantial
You need to
profits
start selling. Yeah.
Yeah.
So we're talking about
in large
four.
chunks.
We're talking about 4K to, it was like 1.2 million.
Yeah.
So like I kept telling him, you gotta sell, you gotta sell. But here's the thing, he couldn't, because there wasn't enough
He
liquidity
couldn't,
to
he couldn't have bridged.
well, there wasn't enough liquidity anywhere
Oh,
to be able to exit a $1.2 million position. So what he would have needed to do, and we talked about this over and over again,
take it from different
was
places.
well, so the liquidity pools, he could have done 50,000 a week,
Yeah.
and it would have taken him like 4 or 5 months
Yeah.
to exit the position at 50K a week. And he didn't even do one tranche. I think he maybe did one half of one tranche for 20K. And so he
At least he got
never,
his initial out.
well, he made a 4x, a 5x on his initial,
I'm trying to look at the
but
bright side.
he missed the life-changing,
Yeah.
money.
Yeah.
And that coin went damn near to zero overnight in like an hour.
Yeah.
So it went from $10 to like 15 cents in like an afternoon.
Yeah.
And I hope he's okay, man, because a lot of people kill themselves over shit like that.
Yeah.
But yeah, no, dude, like you don't take screenshots, you take profits.
Yeah.
And especially
Mhm.
something like that. And it makes it so much easier to hold on to the rest of the bag. So you don't just exit all at once. On the way up, assuming that you picked the right dozen, and the projects, all the research that we do,
Yeah.
like I'm pretty sure we've got our fingers on the pulse of this market pretty well. I think we do.
I think that we're gonna that we'll end up hitting at least a couple.
I think so.
Probably not all, but there's 2 or 3 that I think are gonna make up for the ones that don't.
And so, if you're DCAing into a position, then maybe you just DCA out,
Yeah.
and
No,
just
well, like I said,
mm,
that's my strategy. Is I
don't
have
get
a ladder
stuck.
out strategy.
Yeah.
And basically, what I did is I just looked at all the assets, and depending on the how much of a low cap it is or a high cap, I said, okay, well, Bitcoin, I'm going to keep that. I'm not going to sell it. So okay, next, I have some ETH. I'm looking for like a 3 or 4x. If I make it 3 or 4x, I'm out. And then some other ones like Kent. If it goes up, it's a higher cap. So maybe I'm looking for like a 5x. So maybe at like a 2.5x, I take 50% profit. At 5x, I take the rest. And then
So when you're talking about the multiples,
yeah,
so one thing that I think about is like, here's an example. If a coin has a $10 billion market cap, just as an example,
yeah,
and we're talking about, okay, I would really start to exit after it does a 5x.
yeah.
Now we're talking about a $50 billion market cap coin.
Mm.
That puts it in like rarefied air. There are very few coins that have ever gotten to that level. So
Well, but you have to keep in mind though that as more liquidity enters the market, the overall market cap goes up, then it gets to a point where 50 million might be like, or
Institutions.
50 billion might be like 50 million now.
Well, or it might be that 50 billion is like not in the top 3.
That's what I'm saying.
Instead, it's like somewhere in the top 50.
Yeah,
Yeah.
that's what I mean.
Yeah,
It's just
yeah.
like as the overall market cap grows, then what we used to think was a large cap is a
Right.
mid cap.
Right. Yeah.
What we thought was a mid cap is now it's a low cap.
Right. And look, crypto's crazy.
It
So
is.
like if we get some type of a god candle out of Bitcoin.
Well, and what if
and
what
all of a
if
sudden-
that Ultimageddon that you're talking about happens, and the great culling and all these vaporware tokens go away?
Yeah.
Is all that liquidity? Is it going to consolidate into some of these other projects and pump them all?
I mean, it's got to go somewhere.
Either I think a lot of it will probably get sucked out of the market because people will be
Maybe
like,
just
crypto's a scam.
stables. Maybe like what you said.
Yeah.
People are going to hold USDC as a position.
Yeah.
Yeah.
Or people roll it into other more established more utility projects.
Yeah, I think that the opportunity that we've been all waiting for to really make that real life-changing multiple 7 figures
I think
type
it's still
money,
coming.
I think that it's literally like over the next couple of months. Because if there is a real dump out of Bitcoin and these alts really get crushed, if you're able to buy stuff,
September 14th at 2:45 p.m. Pacific Standard Time. You heard it here first.
Exactly.
You heard it here first.
If you're able to
Save the
buy
date.
stuff at cents on the dollar, and then it just recovers back to the highs from last bull, like on most of the coins that we're talking about, if we can buy them at the lows from last bear and they recover to the highs of last bull, then we're talking about, for just about all of them that we've mentioned, an easy 5, 8, 10x on every single one.
Yeah.
So like
I said, that's all I need. If
Yeah.
I got a 10x on my overall portfolio, I mean, I would have a sizable portfolio that I could easily
you can live off of that
I could easily live off.
easily.
I mean,
and
I could-
travel and live.
Yeah.
Yeah.
And only have a portion of it deployed.
Right.
Like wouldn't even have to have the whole thing deployed.
Exactly.
It could be sitting in Bitcoin and just fucking
Right.
marinating.
Right. Yeah. Yeah.
Well, and then the next step,
You know,
like
stick it in, let it marinate.
yeah, once you do have some of these assets, like when do you start getting back into liquidity pools or start
When do you start getting back into the assets?
and the assets
I'm just thinking like liquidity
and
pools.
liquid pools?
Yeah.
liquid pools and
I don't know, man. Liquidity pools, I think, are played out unless you're talking about like specific pools. I don't know. I just know too much about fucking liquidity pools to be
Yeah.
like, I can't get turned on by liquidity pools anymore. Like all of those videos that I see other influencers put out on YouTube and X and Instagram and TikTok, not so much TikTok, but YouTube and X,
It's more flashy.
about like, I'm making 10 grand a month, you know, and
in liquidity
and passive
pools.
income
Yeah.
through liquidity provision. It's bullshit. It's not fucking real. Like that's not how liquidity pools work. Like you're taking all this gamma risk, your theta's not going to outpace your gamma for most of them. And so you are the yield. Like you're not actually making money compared to just holding for most pools. So I'm just thinking like, okay, a liquidity pool that's like got a legit V4 hook attached to it where you're taking into account the volatility of the underlying assets and you're capturing MEV and you're preventing, you know, JIT bots from exploiting you, and you know toxic flow is not a problem because there's an oracle attached to the pool. If you've got all of those things, then maybe a Uniswap V4 pool makes sense, but I don't know any Uniswap V4 pools that have the hook that I just described. So in the absence of that hook, I can't be an LP unless it's like I want to be in a gold pool where it's gold paired with gold because there's a ton of volume. That would be almost a replacement for spot, kind of, sort of. But even then, there needs to be a ton of volume. So the opportunities to generate like real passive income as a liquidity provider, I think that that requires a V4 hook, like a specialized V4 hook contract, because the structure of those CLMM, those that AMM, the structure of that, it's structurally not profitable. Like you do not have an edge as an LP. In fact, you're very likely to not make money. But if you're in a V2 pool and you can sit through volatility and you get lucky, like it moves down, you eat a ton of impermanent loss, and then it returns to your entry, and then you got all the yield,
Yeah.
well, then you're profitable.
Yeah.
But you took a ton of risk, you know? So yeah, it can work. It's just not for me. Not for me. Not anymore.
Well, you see lower hanging fruit that is juicier.
Well, yeah, I mean, it's way easier
A
just
lot
to.
less work, a lot less risk, and with the same or maybe even better reward.
I think so. It's a hell of a lot easier to sit on cash, wait for an entry in the dozen projects that I think are going to survive and really thrive next bull, and then enter, and then do nothing, wait, and then sell. That's it. You know, patience. Sit, enter, do nothing, sell. That's about it. But it's not easy. You
No,
know?
it's easier said than done.
Yeah.
I'm
It's
good
boring. It's boring too.
at it. I'm good at it.
Yeah.
You get that itch.
It's difficult.
Sometimes you scratch that itch too much and it gets infected.
That's not good.
That's not good.
On that note,
Fucking A, man.
Oh,
well, shit. Should we wrap it up?
yeah, we've been going a little long today.
Nah, it's all right.
That was a good time.
Yeah.
It was. All right. Well, I hope everybody out there got a little something out of it. I hope that it made you maybe reflect a little bit about what you're doing with your portfolio. How you are positioning yourself for us potentially going lower, not guaranteed, but potentially going lower. Are you going to be in a position to where you can take advantage of that?
Right. You got to position yourself behind the market.
You don't want to position yourself improperly and be in front of the market, because then you could get screwed.
You got to be careful.
You want to be behind the market and do the screwing. You want to be the screwer, not
Yeah.
the screwy.
Yeah.
There you
Just
go.
saying. So with that, I think personally, I'm going to be reassessing my ladder out strategy. You know, because it's been a minute and a lot of things have changed in my portfolio since I looked at that last. What's some things that you're going to do? What's your closing thoughts?
Yeah, getting my shopping list ready and start getting a breakdown of how much like percentage of each one of those I want to have allocated in my portfolio, and then just start. If I can't find a non KYC,
Might be stuck.
you know,
with that.
onboarding, yeah, because trying to find a peer-to-peer service, I mean, that might just be a pain in the ass because every week I don't want to have to go and meet somebody and do all the
Do you
fucking
really want to go meet
rigmarole
a stranger with a
Well,
bunch
just
of
tell you
cash
what,
like
I'll
that?
onboard it for you, but it's going to cost you.
I'll charge a fee.
Yeah, 10 points. 10
If it's
points.
So
cheaper than the
here's
Bitcoin
something else.
ATM.
Yeah, right.
Like, did the Clarity Act or Genius Act make peer-to-peer illegal?
I don't
Because
think
it
so.
could have. We
It
need to
might
look. We
have.
need to look into that because I think that there would be reason for regulators to think that, you know, libertarians who want to be sovereign by not having their buys surveilled, that that's actually some type of evasion.
Yeah.
Heaven forbid,
Yeah.
you know. And so, like, they made that illegal,
Yeah.
right? So I don't know if it's been made illegal or not, but peer-to-peer on ramping, we need to find out. Yeah.
Mm-hmm.
But also the idea of like meeting a stranger in a parking lot with an envelope of cash to buy
Yeah.
Bitcoin, like that whole idea to me is kind of like,
Sketchy.
yeah, sketchy.
Well, so I think the rest of this weekend we are signing off. So you know, very little cell phone, very little. We won't be doing any shows. So we're gonna try to do some get creative. We're gonna brainstorm and just kind of relax and enjoy the woods and enjoy the relaxation for the weekend. But I hope you all out there will get out, touch some grass, touch some cash, touch some ass, whatever it is you want to do. And
Maybe throw some cash at some ass.
yeah, you can make it rain. You know, throw some cash at some ass, and then maybe smoke some grass. So I'll just yeah. Hope you all have a great weekend. Until next time, Veteran Crypto out.
Peace out. Oh, I need to change the
the outro video.
Outro.
oh, we need to swap. We had the wrong thing set up.
Exactly.
So there we go.
There you go.
Fixed it.
Where is, yeah. Peace out.